John, good to have you with us. You've been around long enough to see a lot of cycles, I know. If you take a look at, say, the recent past, when there have been recessions or when there was a trade war, typically, what have currency moves been like? One, and this time around, if either of those two options eventuate, is it any different?
Yeah, well, certainly the Aussie dollar is one of the weakest currencies in a recession. In fact, you struggle to find a currency that fell more during the GFC, the depths, sort of the end of 2008. So it is hugely sensitive to trade, but then it'll reverse in line with the recovery. So Korean won as well, you mentioned it there. That's another one that's potentially quite sensitive. But obviously the Aussie tends to be a bit of a proxy for global trade because it's so flexible, because you can buy and sell it without any causing any concern about officials warning about herd behaviour, etc. So essentially, you can knock it about all you like, but it's been quite resilient. So. Look, I do think that the Aussie would be one of the big losers if we really do get into a trade war, and I have been getting more client questions about that even before today. So it is a hot topic here, but I must say that we were very worried about a year ago as well. So we have found that particularly with the pressure from China, or China's lobbying, President Xi seems to have done a good job of diffusing tensions in one-on-one meetings with President Trump, so that has helped. So I think for the most part, markets are inclined to look on the positive side, and global growth is coming off a very high base. So look, I think as far as price action in response to these the tariff announcement overnight, that the overall market response is that the US could be shooting itself in the foot, and that the impact will be worse on the US economy. So we actually got a fall in the US dollar in response to lower yields.
Okay, so if that is the case, Sean, and if you believe that, start connecting the dots here. Are we talking about higher imported inflation, higher input costs, hurting industry, hurting companies, hurting earnings, hurting stocks? Are we talking about recession, or?
No, at this point, if we will see where it leads is the bottom line. Is this the start of a whole wave of such measures? Will it range from industrials to agriculture, etc.? What will the response be from key trading partners? Obviously, so far we've heard some very unhappy comments from the EU and China, etc. So we're yet to see how it will play out. But clearly, if you're listening to businesses themselves, from the beer manufacturers to anyone using these metals who really understand what their options are, then they can see their costs are going to rise. And so I think it's more in terms of the potential hit to the industrial sector, even though presumably there will be a small number of winners somewhere in the US.